All right, quick market update. So today interest rates ranging around 6.6, of course, according to Mortgage News Daily, FICO, LTV, things like that matter. And today I'm here to talk about where will interest rates likely be throughout the rest of the year. So today, June 4th, already going to give our predictions for the rest of the year. So buyers, sellers, everyone can kind of anticipate where you're going to be. So right now, obviously the key driver with interest rates is going to be the US-Iran conflict. And so what we're looking for there is we're looking for those peace agreements where the market will know that, hey, the Strait of Hormuz is going to open, so we don't have to worry about inflation rising at an elevated level. So we look at Polymarket, and right now Polymarket has at around a 38% chance that a peace agreement will be made by the end of July. So that's still 50 days from now. And it's still only a 38%. This swings pretty volatile, right? We've been watching it week in, week out. Last week it was about a 50% chance. I think it was 2 weeks ago, it was like a 60% chance. So as of right now, it's not as optimistic, but the market moves heavily based off of every tweet, based off of all these headlines, like is an agreement going to be made? But the reason why, obviously, it's leading the charge with interest rates is basically inflation, okay? Inflation. Why did interest rates move from 5.99? We finally, been waiting it for 4 years. We finally got a 5 handle on interest rates at the end of February. Why did we move from 5.99 to 6.7? And it's just simple. Inflation is ruling everything, right? Typically, labor over inflation, right? Labor drives markets more than inflation, but right now it's inflation actually over labor. So inflation data spiked drastically. We had a month-over-month print in March at a 0.9% print. That's just crazy, okay? Let's look at this, 0.9% in 1 month. Annualize that out, that's a 10 to 12% inflation rate. Not sustainable, right? Okay, it came down. So March 0.9, then we had April 0.6%, okay? Still unsustainable. That is a ridiculously high number. Now we have May inflation, which is probably scheduled to be released next Wednesday. That's likely going to come in at 0.4. And then June inflation, which we're only 4 days in, but again, it's funny how this works. You look at the Cleveland Fed, typically once you're about 4 to 5 days in, inflation kind of stays there for the remainder of the month. That's projected 0.1. So we see a drastic dip in inflation. So that initial surge of inflation has really fallen off. 0.9, 0.6, 0.4, likely 0.1. So it's likely we're going to range 0.1 to 0.3 on inflation on a month-over-month basis, unless, of course, the war starts to escalate. So the reason why this is the issue is, okay, 0.9, 0.6, and 0.4 prints pushed up annual inflation rate. So right now, inflation is going to range 3.5% to 4.5% for the rest of the year, okay? Fed targets 2. That's not happening, right? Anyone that says it's going to happen, they're wrong. We are not hitting a Fed target for the rest of the year. It's likely we're not hitting the Fed target not until summer of next year. Of course, we have to wait to see if, again, we have an agreement, because then we can actually account for that. But yeah, it's not going to happen. 3.5 to 4.5. Fed target 2. We're double the inflation rate, okay? So there's 2 ways to look at this. One, that is why interest rates are likely going to be a little more elevated for the remainder of the year. Again, so we're at 6.6 right now. If an agreement is made, likely going to be a little bit more elevated, likely going to range 6.25 to 6.75. That's going to be our range, okay? We can get back down to that 6.25, but anyone that's going to offer us 5.99, as this is not going to happen, right? And this is because inflation is going to take a full 6 months to 12 months to get back to that 12%, or back to that 2% target. So again, 6.25 to 6.75. This is our estimate if an agreement is made in the next 9 days. If some type of escalation happens even further, you can likely see us push above the 6.6, 6.75 range. We'll likely go from 6.75 to about 7.25. Again, I know that's not what everyone wants to hear. That's just reality that we live in. So those are our 2 boxes, 6.25 to 6.75 if an agreement is range, 6.75 to 7.25 if some type of escalation happened, and it's all based off of inflation. We have positive news with inflation coming down. Hopefully we have an agreement soon, and we know we'll be 6.25 to 6.75 for at least the rest of the year. So if you have any questions, feel free to reach out.